Every tax strategy out there falls within 5 tax pillars, and over the next few days, we're gonna go over each one. And today, we're starting with the first one, the easiest one. We call this one deducting. Deducting is like a step over in football or a hezi in basketball. It's like your go-to, your bread and butter, your most common strategy, your most common move. Because it's the most common strategy, this one is admittedly one with high risk and low return. Once you get to a certain wealth threshold, deducting is going to be that pillar that's sitting in the back end that you don't think about too much. But for the purpose of learning tax and learning strategies, deducting is going to be key in making a dent in the tax savings that you get. Now let's hop right into it and show you an example. Here we have a flourishing Canadian content creator. Let's just call her Sally. She's in Ontario. She's getting eaten alive by federal progressive tax rates as well as the rates in Ontario. On a taxable income of 150K, she's paying 45K on that. So that's pretty much a third of her income, right? Deducting comes in, it's pretty straightforward. She's at a marginal tax rate of 26%, which means that whatever we contribute as an expense is going to net her 26% times that expense in tax savings. So if she were to say, as a content creator, our OPEX run pretty light, but let's just say that her margins are 50%. So she had 50K of expenses. Seeing her total tax decrease from 45K now to 27K because we're factoring in the progressive tax rate, the marginal tax rate, and the ROI on her savings is going to be equal to the expenses, the deductions that she incurs, multiplied by her current marginal tax rate. It's not only applicable to business owners, right? Even if you're an employee, even if you earn a T4 or a W2, which we're going to get to a US example in a different video or in a different scenario. That's basically how deductions work. There are a few more nuances on the US side when we get to talking about adjusted gross income. So I'll make a separate video for that. If you have any questions, leave them in the comments below. We're going to try to go through each tax pillar because they go up in difficulty. And as a result, they also go up in terms of the tax benefits and tax savings you can have. So stay tuned for those, and I'll see you in the next video.